Welcome everybody. This is George Veter talking to you from Veter Ranch up in Coarse Gold, California. I want to talk to you a little bit about what's going on with the market, what happened in April, what's going on in May, and prepare you for the balance of the year the best I can. I wish you were here with me. I love this ranch and this setting. The grass is green right now, the cattle are fat, the horses feel good, and this is really heaven on earth in this season. So I invite you to come to the ranch whenever you can and experience this, and it's fun for me to do this in this setting. Hey, first of all, we're here in the 8th of May, and we've had a pullback in April in the market. All of you are aware. Just a little over 4% in the S&P, and it was created by some unfavorable, or in the eyes of the analysts, unfavorable inflation data. The CPI and the PPI, which is Consumer Price Index and Producer Price Index, came in a little bit hotter than what analysts were expecting. And because we want the inflation to be calming down, and we want the Fed to respond by lowering interest rates, certainly Wall Street wants that, and those of us wanting to buy a home and get favorable interest rates, we're hoping for maybe a better number. Even though it was off expectations, only 10 basis points approximately. So that caused a little sell-off in April. And again, I say a little sell-off. It was less than 5% in the S&P, which is less than half of what we call a correction, which is a 10% pullback in the market. And just to tell you right here, we need those little pullbacks. We need buying opportunities. We need overreaction when there's something that spooks the market a little bit to uncover value in the market, to create opportunities in our portfolio. So that's not something we're scared of. When those things come along, it's healthy and we're grateful for those things. Now, here we are in May and the market's going higher, primarily because last Friday we had a very favorable jobs data report. We created 275,000 new jobs in this country, and we thought we were gonna, 175,000 new jobs. And analysts were expecting 240,000 new jobs. Now that sounds counterintuitive, that we created less jobs than what we thought we were, and the market was happy about that. But that inspires the Fed, or will influence the Fed, to think harder about lowering interest rates sooner rather than later. We also had the unemployment figure that we were planning on being 3.8 sneak up to 3.9. So it's creating a little softer wage environment, making it easier to hire people and calming down wage inflation, which wage inflation is the mother of all inflation. When we have to pay our people more as employers, then we have to reprice products and services, and we have inflation in any related area. Now, here in May, we have shaken off the April little pullback, and we're going higher, primarily because of earnings. Earnings have again been so far, and we're more than 75% through earnings at this point of the S&P companies. Earnings have been 80% ahead of expectations, which is just phenomenal. Anytime you're above 60%, we'll call that a win. And we've had multiple quarters where we've been higher than 80% as what we call a beat rate, above expectations that were given to us by these companies the quarter before. Now, we have three things going for us that makes me super optimistic. There's always the chicken littles, and as you know, I don't buy into the chicken little thesis. I believe that we have lower employment figures, so we have the data we need for the Fed to move and to allow us to have the softening of the interest rate cycle, which is going to help Americans and help Wall Street. The Fed is now getting on the side of the market. Then we have consumer spending that continues to be super strong. We have wage inflation over the last year, which has put money in people's pockets, and they're spending that money. 70% of the US economy is consumer spending. It's not corporate spending. And then we have just the seasonal time of year. We're in the middle of an earnings quarter for the first quarter, which gives us momentum all the way till July when we have the second quarter earnings. So I think that we will probably have a very similar year that we had last year, barring anything unforeseen that can come along. Obviously, nothing's guaranteed. I think probably we'll continue to drift higher on good earnings and this favorable data. We will probably, after July into August and September, have a little slump. I always tell people, if you have extra cash, wait till the third quarter. It's not the same every year, but most years the third quarter is the softest. And then that launches us into the fourth quarter in October when we have earnings, the middle of the month. And by the time earnings are exhausted for the third quarter, we're into the holiday spending season, and that's party time on Wall Street. The highest average returning month since World War II is December, and then November, and then January, in that order. So I'm super optimistic. Let's make sure that we've got everything leveraged into the market that we can in a suitable allocation model that gets us where we want to go without taking unnecessary risks. Again, I'm just grateful for my clients. I hope that you enjoy when we mix these two worlds together, a little bit of the ranch and a little bit of the financial practice. I grew up believing that cowboys were a special breed, that nobody did contracts, right? You just shook somebody's hand and that was the deal. In fact, we have this big rodeo event this weekend on Saturday. I have horses coming from Nebraska being hauled out here, and nobody signed a contract. It was just a verbal deal because cowboys keep their word. They work hard, they work through problems, they don't feel sorry for themselves, and they're fiercely loyal to family and fiercely patriotic for this country that has given us the cowboy culture. So I hope you enjoy it and experience it when we let you in. And please invite yourself onto the ranch as often as you can. We'll give you tours and show you what we do for real fun here. Thanks again, and I'll talk to you next month.